Hello and welcome to BQ Prime. You're watching Talking Point, and my guest today is Sandip Agarwal, who's an independent software services expert. Sandeep, we saw the disappointing results coming from Infosys last week. What's the first take on those numbers?
Thank you, Sajid, and good morning, and thanks for having me on the show. So, yes, there is a big disappointment on all fronts, right? On growth, on margins, and on guidance itself. Although some bit of disappointment and cautiousness was built in by the street and the analysts, given so much of noise on the U.S. banks and the contagion, but I think the weakness was more pronounced than what was anticipated. So I would say that it has resurfaced the question that U.S. banks contagion could be hitting very hard the Indian IT services firm as well, although with a lag effect. So I think that is a new question mark which has been raised and which comes with this numbers. Similar kind of little weak numbers I would say also came from TCS. So we have to accept that there is some kind of cautiousness at least on the management's part, and they are very close to clients. They are seeing something which probably will reflect in actual numbers in future, and that is why they are so cautious. Only thing I would like to highlight is that Infosys by nature and by last, if you see their track record of last few years, you will see that their warning bells are more with a very high decibels. So they put it very strongly when they see some warning. So whatever they are guiding should be taken as the bottom of the range and not as midpoint or a top end of the range. That's all. That is the only solace which I can say.
Mhm. The 4 to 7% band is pretty. I would say, very cautious from an Infosys standard, uh, and does it also bring in this uncertainty about profitability growth coming in, because they have also narrowed the margins guidance to 20 to 22%. Uh, do you think that 7% is looking as of today, 7% is looking very aggressive, and maybe they may be only able to come to the middle point of the band?
So let me put it this way. See, there are two parts. Revenue is this is a quarter to quarter billing business, right? Because whatever number of employees you have in the end of the previous quarter, to some extent, your current quarter revenues will depend on them. If you take the billable employees of previous quarter, because that is where what you can bill along with some who are coming out of training. Having said so, on the margin front, I think they are guiding very cautiously and they are taking into a lot of things into account, the operating leverage of lower growth and all. So margins, depending on where currency is, I think there could be some positive surprise or solace. And remember that this kind of growth guidance when it comes, it also brings in a very low attrition, which is not reflecting in numbers right now. But as attrition starts falling, you can control some employee cost also, because employee cost is a function of demand. So if demand goes down or there is a lower amount of demand of manpower, then attrition will come down, and if attrition comes down, the employee cost obviously will come down to some extent. So I would not read that there is a risk on the margins. I would see that this growth guidance could be 7% only and may not breach that, because you have a very poor exit this quarter.
That's true. 2.1 billion of TCV, and they're also guiding that 4 to 6 months it will take before the revenue start kicking in, which basically means that growth could be, even though the company is saying evenly poised for all the 4 quarters, you're going to see some kind of push coming in only towards the second half of the year.
Yes. So what happens generally, if you see in Indian IT industry services, second half is generally seasonally weak, because third quarter you have a lot of holidays and furloughs related to Christmas, and fourth quarter you have little less number of working days because of February. So generally, our industry is always first half driven, barring some companies which have very high exposure to Asian and Middle East nations. But otherwise, whoever is on the European market, depending on Europe, UK, and US, they will generally have first half which is very stronger. So from that perspective, I think first the next 2 quarters, after having such a bad quarter, you will see some kind of strong comeback. The positive surprise could come in second half if this US things, the recession and all those things are not as pronounced as we are anticipating today. So you may have a evenly poised growth in that sense. Generally, first half is strong, second half is weak, but this time first half could be okay, and second half can see some relief coming, as you rightly mentioned.
Mhm. In the sectors which they are in, BFSI seems to be the pain point coming in, especially the US BFSI. Do you see this getting prolonged, this pain point? Because even if the US comes out of recession, or there are fresh green shoots coming from the US side, by the time the companies start putting in IT spend on the table again, it would be end of the year.
Yes, absolutely. You are right. So basically, once a ship is moving, IT is a very large ship and it is moving, and you suddenly put a brake, it takes some time to stop. And the reverse is also true. When you start, also, it will take some time. So you're absolutely right that, from the client perspective, also, once they start looking little cautiously, then by the time they again become aggressive in coming to spend, it is a gap which takes some time.
Mhm. What about other sectors? Mortgage has been weak for a couple of quarters. We now hear communication is also coming in little weak because spends have come down, and more so in form of companies spending from a revenue point of view rather than on a cost point of view. So, do you see further this impact of communication hitting other companies as well like Tech Mahindra and others?
Yes, so communication, the only saving grace is that 5G spends are on, and people are planning to spend more on 5G because they want to be 5G ready. So that is the only saving grace. Otherwise, from cost perspective, what you are saying is absolutely right. That there will be some cost cutting and all those things which can have an impact. But on the other side, to be 5G ready, they will have to incur capex, a part of which is also comes to the software services side.
Hmm. Overall, how do you see the top five doing? Because the commentary from the first two are a little disappointing and muted. Do you see similar commentary coming in from others as HCL Tech, Tech Mahindra, LTI, Mindtree?
So, in IT broadly, it is an industry phenomena always. So everyone moves together, goes up together, goes down together. There would be 1 or 2 quarter of lag. Yes, if there is a leadership, very good leadership, then you get what 100, 200 basis point benefit from that. And if you have a little weak leadership or something which is not working, then you get punished on the other side. But right now, if you see the industry, everyone is having a very good team in place and all that. So I don't foresee someone doing extremely or exceptionally well and others not doing well. That scenario looks unlikely. So you will see muted commentary and little cautiousness for next couple of quarters at least. But those whoever are in transformational side of the deals or infra management side, they probably will not see such a sharp negative reaction immediately, because those are more business continuity kind of spend rather than investment kind of spend. So investment kind of or discretionary kind of spend takes the big beating at the front, and the continuity type of spends generally don't get much benefit also, and they don't get beaten down badly also immediately.
What about the leadership changes, both at TCS and Infosys? At Infosys, the BFSI head moved on. In TCS, we are seeing a change at the top end, maybe Kirti taking over on June 1st. There would be a what do you call a honeymoon period for them to settle down, and that too in midst of a volatile US BFSI space, which is hitting companies very hard.
No, you see, I would put it this way. Kirti is a very old hand. If you see TCS, right? So he is there for more than 30 years. We have met him several times in the past, and he's an exceptional leader and he has a very good grip on the BFSI. Secondly, the order books are generally, if you see the order book is also okay, and BFSI order book particularly was good. So I don't see, there will be a big gap. But let me put it this way: this year probably you will see TCS and Infosys growth more or less coming closer, or converging. Like previous years, you have seen there was some gap, but this year you may not see any gap.
Do you
So I
see realigning of the valuation of both the companies because TCS was at a little premium to Infosys? Do you think now that converging as well?
yeah, TCS premium probably will reduce, because premiums generally go up when there is a disproportionate gap between and also there is a leadership change, so the premium gets little diluted. Having said so, TCS being almost 60-70% bigger than Infosys, there will still be some premium which will be there.
How do you see this scenario panning out for the mid-cap IT companies? While the top level, you know, is showing some weak commentary, do you see significant impact coming to mid-cap IT?
So mid-cap IT also, generally we have seen they facing the same thing with a lag effect. So mid-cap IT may not react immediately in the similar fashion in this quarter, but there'll be some cautiousness in the commentary. And those now, if large cap is going to grow, let's say at 6 to 7, 8% or so, or 5 to 7% or so, then the mid caps cannot do more than 12, 13% growth. But the multiples, as suggest, are little expensive from that perspective. So there could be some reaction across the industry, and we have always seen that this industry moves in tandem, going up together, going down together. So there will be no exceptions in my view.
You know, during the pandemic, because of the various factors and cost efficiencies, you saw the growth uh, which Infosys is doing or TCS was doing at a higher level. Do you think that the industry is resetting itself to a pre-pandemic growth rate?
No, so there are two things, Sajid, which has happened. One, before pandemic, if you see previous 2, 3 years, because of this digital and cloud adoption, there was a gap when technology spends were not that much because clients were also thinking how to spend, where to spend, what is the future of technology. So they were doing the necessary spends. Pandemic, what it did, it forced technology on in a very big way. Something which was to change in 10 years happened in 2 years or 1 year period, and that is the reason there was a lot of upfronting of spend also which happened. Unfortunately, today what we are seeing is a temporary problem. I think structurally tech will do well and will grow well, because without tech you can increasingly, if you see the role of AI and other things which are coming in every device and every aspect of human life, it has to go up. But having said so, in bad times, people reserve their balances, their cash, and we are going through that phase where all the companies wants to reserve some of their funds, and they would again be comfortable to spend when the times are certain rather than uncertain.
Sandeep, it was a pleasure talking to you today. Thank you very much for joining us on BK Prime.
Thank you so much. Yeah.
Bye.
Done. Thank you, sir.